morning, welcome to IG's early morning call. It is Tuesday the 9th of January. Let's take a look at the headlines as we wait the start of today's European session, which is looking as though we could well see some gains at the beginning of today's trade. We've seen gains across the APAC markets tonight, overnight, in the wake of some positive news coming out of the US, led by tech stocks yesterday. And this has felt a generation of positivity. We've got the German DAX looking as though it could well open up at a new high for the year, and a 34-year high for the Japanese Nikkei 225. Meanwhile, not so good here on the high street. Lackluster Christmas sales coming through. The British Retail Consortium says in its latest survey that the festive period failed to make amends for a challenging year overall. And we're watching the stock of Boeing this morning, all sessions on the IG platform at 9 o'clock UK time. We'll take a look at what happens at the beginning of today's session. We've got concerns deepening as overnight we've seen two more airlines come through with reports of loose parts on multiple grounded aircraft, all belonging to Boeing. Let's take a look at what's happening with volatility. On the way down, we have escaped this symmetrical triangle we've had here. We did so at the back end of last week, an entire candle yesterday below the rising line of support, and here we are now down at 1460. So as money goes out of volatility, goes into risk assets, we are at the moment, let me just quickly check on what's happening with the 30-minute candle, which I prepared earlier, showing us where we were. In fact, let me just get that on yesterday's close, because we were looking at one point as though we were seeing gains, and indeed that is still the case. There's the close yesterday morning, last night on the cash session, with the markets making progress overnight and going into the start of today's trade, despite the fact we've got a little bit of a gloomy picture being painted on the British economy, especially for the consumer from the British Retail Consortium. We are at the moment still seeing gains on the cash session expected at the start on the top of the hour. Going back to the one-day candles, you can see that we are not yet above this blue box, which is the close of the 24-hour markets last year. But if we look at the German DAX, it's a very different picture. And we are now, or have been today, and indeed on the 24-hour candle yesterday, closing above the point at which we closed out 2023. So the German DAX doing better than most in the markets at the moment. French CAC 40, just to quickly reference what's going on there. A little bit of a downside trend on the 24-hour markets, but we're still looking for a positive start when trade gets underway. Now, let's take a look in some more detail about what's been happening overnight in the Asia-Pacific markets, where we got the Nikkei 225 trading there at on the 24-hour markets at levels not seen in 34 years. We've got gains on the Singapore Straits Times Index. We've got gains on the S&P ASX 200. So you can see that it's been a positive trading day overall overnight. I want to show you what's happening on this chart here, which was the Japanese 24-hour markets, just to show you what's been going on in today's session. Intraday, we've peaked almost at the 34,015 level. We're currently trading just below the 34,000 level on this market, and these are, as I said, highs that we've not seen in 34 years at one point on the Nikkei 225 in today's session. Let's take a look at what's been happening as of yesterday's close on the Dow Industrials, the S&P 500, and the Nasdaq up a whopping 2.2%, which is where I want to start on the charts, because I think it's worth looking at what's happening in this index. We are still nowhere near the close we saw at the back end of last year, but we are looking at gains overall. Big strong day yesterday, as we've just seen, 16,616. We're holding on to the gains that we saw at the back end of yesterday. Just want to show you one stock which I'll reference again very briefly. This is a stock of Boeing, losing around about 8% in yesterday's session on concerns about that blowout on the weekend incident on the Alaska Airlines flight. And we'll be looking at 9 o'clock this morning to see just what's happening overnight. We've got some more news. I'll cover this in more detail in just a few moments' time. But that was certainly a drag on some of the markets. Despite that, we saw gains on the Dow Industrials and the S&P 500. And as of this moment's session at 37,622, the close of the markets yesterday, sorry, at the back end of last year. We are not quite there at the moment, almost, but not quite. The markets having gained yesterday, broadly speaking, holding on to the rise that we saw in yesterday's session. Now, the latest survey from the British Retail Consortium paints a rather sad picture of the British consumer, especially over the Christmas period. Like-for-like sales in December, according to the BRC, rose 1.9%, slowing from 2.6% gains in November. The December figure was the lowest in 5 months. Now, Helen Dickinson, she's the BRC chief executive, she said that the festive period failed to make amends for a challenging year of sluggish sales growth, as weak consumer confidence continued to hold back spending in 2023 as a whole. Retail spending rose 3.6%, driven by an 8.1% rise in spending on food. Non-food spending fell 0.1%. Now, in a separate survey coming through from Barclays, I want to show you what's happened there with the numbers out from Barclays, showing that spending on debit and credit cards rose 2.3% in December, slowing from 2.9% in November, and supported by strong spending in pubs, bars and nightclubs. This is a quote from the chief economist at the Barclays research unit. Jack Meaning expects inflation to fall further in the opening months of 2024, putting more spending power in the pockets of UK consumers, and should help support them continue to spend even against the tough backdrop of weak economic growth. The problem for me is that in this regard, this is all about spending on credit cards. Let me show you this chart here. Nonetheless, despite the fact that we've got what the BRC says is a rather sad picture for the UK high street, sterling is gaining today against a slightly weaker dollar at 127.49. Now let's move on to take a look at other areas of the market. I want to talk about what's been happening over in Australia, where we've got some retail sales coming through. In fact, pretty good numbers out from the Australian authorities. The index increased 2.2% in November, month on month, exceeding market estimates of the 1.2% expected and shifting from a revised 0.4% drop in October. Sales rebounded for the most retail industries, boosted by Black Friday events. I want to show you what's happening with the Australian dollar. Slightly weaker against the US dollar today at 67.10, not too far away from this line of support at 66.88, which were the highs we saw back on Monday, the 4th of December. Meanwhile, in Germany, industrial production unexpectedly fell 0.7% in November, month on month. Economists had anticipated a 0.2% rise. Meanwhile, at 10 o'clock this morning, Eurozone employment figures for the month of November. Let's take a look at those figures. The rate at which measures the numbers of people actively looking for jobs in the euro area as a percentage of the labour force was at 6.5% in October, and it's forecast to stay the same. Signs of weakness in the labour market could relieve inflationary pressures, though, in the bloc, and the data will be closely watched by the European Central Bank as a consequence. The ECB said in September last year that it expects Eurozone unemployment to rise to 6.7% in 2024, as sluggish growth prospects force employers to cut jobs. Meanwhile, investors will be keeping across a raft of economic data in the States this week, starting in the US trade balance data for November, due at 1:30 p.m. today. The deficit forecast to widen to $65 billion in November from $64.3 billion in the previous month, October, was already the highest deficit in 3 months. Let's take a look at what's happening with the dollar basket as we look to indications potentially of what could happen later on today. And technically, we remain in the confines of this downward facing channel which we've been in since the highs that we had back on the 1st of November last year, and in 1, 2, 3 several touches on the top side of this, with the closing candles pretty much all within the confines of the upper reaches of this channel. The lower reach of the channel at the moment now coincides with the 100 level. We're currently trading at 101.85, and we continue to monitor what's happening, and we await to see any further evidence of any potential for an interest rate cut from the Fed. Last week, stronger than expected job numbers somewhat dampened hopes for an early Fed rate cut. Staying on the charts, just want to show you what's happening with the euro dollar, because the way to trade this is the euro dollar, where we've seen what is effectively now the 4th day in a row of gains. It was a big wild move on Friday, of course, with that jobs data out that we saw. The majority of 64% economists still expect a rate cut to happen at the FOMC March meeting. but that's to be compared with the 90% pre-NFP print. Now, where do we go with this? Well, this stronger euro against the US dollar. If you're long on this, your stop goes underneath this area down here, around about the 108.60 level. We're currently trading at 109.60. This is the area of resistance to work chart for, which is the highs that we saw back on the 29th of November at 110.17. So if you're long on that, that would be your price target for euro dollar. Stay on the charts. Just wanted to update you as well on what's happening with a couple of corporates out this morning. This is Hayes. This is the recruitment company. The business says this morning that quarterly group fees are down 10% after a more difficult December month than had been expected. The group expects operating profit pre-exceptionals around 60 million. Now that's below market expectations. So that means this is officially a profit warning. So where do we go from 107? Your stop goes above this area up here. Let me just quickly run that up a little bit. So your stop would go around about the 110 pence level. 107 is where we open. Got some support just below where we are at the 200-day moving average, but then you've got to go all the way down then to this low close that we had, or low print that we had on this candle back on the 30th of December at 102. That would be your price target if you're short on this, with your stop above the 109 level. Well, 107 is where this stock is going to open, and we're expecting that on the way down. After Hayes said it was too early to say December weakness reflects a more sustained market slowdown, but at the moment the company is expecting somewhat lower profits as a result of what we have at the moment. Now let's take a look at another chart which we were referencing at the top of the show, which is what we had here for Boeing yesterday. Now this stock was down 7.7%. It was down as much as 8% in full cash trade yesterday. The biggest one-day drop since October 2022 after a section of the fuselage fell from the Alaska Airlines 737 MAX 9 on Friday. Now, reports are coming in overnight from United Airlines of bolts in need of additional tightening during inspections of Boeing 737 MAX 9s. United Airlines and Alaska have both been reporting some loose hardware on some of these planes. Now, this door plug that fell from the Alaska Airlines back on Friday, it's a piece of the fuselage with a window that can be used as an emergency exit in certain configurations. The Federal Aviation Administration, the FAA, says, which regulates the air travel in the US, has grounded 171 planes of the same type. So we're fully expecting when this stock opens at 9 o'clock this morning, there could well be further losses, and we'll know more about that when you look at the IG platform at 9 o'clock this morning. That stock will open $229.60. Quick update as well on this stock. This is Ryanair. Ryanair has not recently been almost at a record high at 1945. It's gained in the last 4 sessions. You can see this big downside candle here was at the beginning of the year. So we're still underwater for the year as overall. We've seen a headline this morning coming through from Ryanair. The company says it's expected to be some 5 aircraft short for the summer season due to Boeing delays. Michael O'Leary tells the FT that it'll likely force the airline to revise down its traffic growth. So that potentially is a negative for the stock at the beginning of today's session. Staying on the charts, just wanted to update you as well on what's happening with crude. Big down day yesterday, but we're still within the confines of this symmetrical triangle. There's been a rise recorded in OPEC output, and we've also seen the top exporter, Saudi Arabia, cutting the price of its benchmark light sweet crude. Now, previously, both Brent and WTI climbed more than 2% in the first week of the year on intensifying geopolitical risk in the Middle East after attacks by Yemeni Houthis on ships in the Red Sea. That now appears to be easing a little bit, but this news yesterday clearly saw a big downside trade on here, which is Brent and also WTI. Just following up as well on what's happening with the price of spot gold, up in today's session after recent declines. We're currently trading at 20.36 for the precious metal. That's it from me. We'll be back at 10:30 with Charting the Markets. I'll be back earlier than that with a look at Boeing as it sees the open at 9 o'clock UK time, or sessions on the IG platform.